English. I've been a professor for about 30 years and a CPA for about that long. And I've got great ways to explain accounting. So if you want to learn accounting, you've come to the right place. Today's lesson is Principles of Accounting, Beginning Accounting, probably your second week of accounting. And we're going to study journal entries and posting. Now, the thing that makes this lesson a little bit different is that Fred's snowblower service has been in operation for a while. Always in the past, Fred was just starting his business. Well, Fred has been operating his business for several months and is doing very well. In fact, what we have here, we've got Fred's snowblower service trial balance for the end of October 2001. And Fred is doing well. He's got lots of cash. He's got people that owe him money. He's got a lot of inventory, equipment. He also has some land. And in addition, he owes some people money and has some common stock, and retained earnings is looking well. Retained earnings, that's where the profits of the business go. That's profits minus any dividends. And he's had a lot of sales in October. Look at that. Sales revenue, repair revenue, and of course some expenses too. But an important thing is our trial balance for the month ending October 31st balances. And this is one thing where students have a lot of trouble with. They'll start on a problem and they'll start out with a trial balance that doesn't balance well. If you're starting out on the wrong foot, it's whatever you're going to do is not going to work. So you want to double check, make sure this balances. Now, what's going on? We're going to do the transactions for November. We have a lot of transactions for November, about 14 of them, I think. And we'll take care of those, and I'll teach you some good ways to do these transactions, some rules of thumb to help make them easier. We're going to put these transactions into the general journal. Now, we also have a general ledger down here, and there's no numbers in here right now. Now, if we were doing this accounting for real, we would have those October numbers under cash and accounts payable and common stock and retained earnings and so on and so forth. All the numbers would be there. But since I'm trying to make this problem look like your homework, you have to create your own general ledger. And so what we're going to have to do is take those numbers from October and drop them into their proper places. And then finally, after we've done all this, we are going to do a trial balance for November. We're not going to go on and do financial statements. I think we've had enough practice doing that. But if you have a trial balance for November, for the end of November, you could easily do financial statements. And if you're saying, well, I can't easily do financial statements, well, go back and watch some of the previous videos. I've got great examples of doing financial statements. So let's get started. So what I'm going to do is I'm going to split the screen. So ladies and gentlemen, what I have is a split screen here, and on the top of the screen I've got that trial balance from October, and it has all the accounts and all the amounts in the trial balance here. And all we're going to do is we're simply going to take those numbers and transfer them down to the general ledger. So when you're setting up a problem like this, and this is a problem that you would expect in maybe your second week, third week of accounting class, is set up a general ledger and just transfer the numbers to the general ledger. So here's how you do it. Cash is on the left-hand side, and I don't know if you remember this, but the word debit simply means left. It does not mean add, does not mean subtract, it just means left. So put that $14,000 right here under cash, just like that. So I've got it on the left-hand side. So how do you know how to do this? Well, there's a left side and a right side of the account. Well, the cash has $14,000 on the left side because it says debit here, left side. So put it on the left side. Accounts receivable has a balance of $5,000. So put it on the left side. Here we go. $5,000. So it's going to take a little bit of time to set up these accounts for you. Parts inventory is $10,000. So put it on the left side. Do you notice a pattern here? Everything's going on the left-hand side. Merchandise inventory for 20 grand. Here we go. 20 grand. And prepaid insurance for $1,000. All I'm doing, folks, is taking the numbers right off the trial balance. You don't have to think at all. In fact, it's probably best that you don't think so you don't mess up. Just move the numbers. Equipment, 3,500 on the left-hand side. Here we go. Equipment, 3,500. And finally, land on the left-hand side, 25,000. So set yourself up some T accounts, all right? And I just have the balances in highlighted so that way they stand out a bit. So coming down the list here, here's accounts payable. Accounts payable is on the right-hand side. It's under the credits. Credit means right. That's all that it means. Does not mean add, does not mean subtract. It just means right. And then we've got unearned rent. Now, unearned rent, what this is somebody is renting something from Fred. So Fred is renting something out, maybe some equipment. And the customer paid the rent in advance. And so this rent has not been earned yet. So rent is the, it's a contract of being able to use property. And that the time has not gone by yet. So unearned rent, $3,000 on the right-hand side. Coming down to common stock. Common stock is $8,000. And then coming down to retained earnings, sales revenue, $45,000. $45,000 coming down the list. We've got repair revenue of $30,000. Oh, by the way, I've got an account here, mortgage payable, and we don't have mortgage payable on the trial balance, and that's because Fred's going to take out a mortgage, and I have it all set up ready to go because I was developing this problem, and I got it all ready to go for you. So rent expense, $5,000. You'll see how that comes out. Now, rent expense is on the left-hand side, so make sure you put it on the left-hand side. I put that on the wrong spot. There's dividends. All right, I think I've got dividends here listed. There it is. All right, I skipped an account accidentally here. That's why you got to be careful. Dividends here, $4,000, and it's on the left-hand side. It's under the debits, so $4,000 on the left-hand side. So I almost messed up here, guys. It's real easy to mess up, even though it's real easy. So rent expense, it's a good idea to double check your work too when you're through doing this. Rent expense is on the left-hand side, $5,000. Marketing expense, $12,000. Wages expense, $20,000. And what do we have left here? Parts expense. Parts expense for $9,500. There you go. All right. Now, it would be a really good idea, and we're not going to do this, but if it were me and I was writing this all out or doing it on Excel, I would go back and double check my work. Just go back, double check one more time, because if you miss a number or you put it in the wrong spot or whatever, things are going to be a big mess and you'll have a hard time figuring out what went wrong. So just double check your work. So what I would do if it were me, I would say, okay, cash, $14,000. It's on the left-hand side. Left-hand side. Good. Accounts receivable, $5,000 on the left-hand side. Left-hand side. So I would double check. We won't do that. I think we got it okay now. So coming down here, what we're going to do now is we're going to do the transactions. And by the way, if we were doing accounting for real, we would not have to set up the general ledger. It would already be set up and these numbers would already be there. In fact, it's these numbers from the general ledger that are used to produce this trial balance, not the other way around. But when you're doing homework, sometimes things aren't set up perfectly for us. So we got it. We have it now all set up. So we're going to go down to the transactions. And here they are. Here's where the transactions start. I think I've got about 14 transactions. We will go up to the general journal. So what we're going to do is we're going to take these transactions and put them into the general journal. Now the general journal is like the gateway. It's the entry point into the accounting system. It's kind of the first stop for all the accounting information. And then what we'll do is we'll take the information from the general journal and put it into the general ledger. And you might think, well, that sounds like a lot of extra work. Isn't there an easier way? Well, I got to tell you that people have been doing this accounting for about 500 or 600 years now. And this is about as easy as it gets. I think if people could think of a better way to do it, they would have thought of it by now. So, in fact, I've had a lot of students that try to think of new ways to do accounting, like little shortcuts. It never, ever works. Never once has it ever worked. And I've taught accounting for about 30 years. I've never seen it work. So it's good to just learn how to do it. It's easy. So all we're doing is taking these transactions and putting them into the general journal. So let's see what's going on. I've got some really good rules of thumb for you too. So here's what it is. Paid rent to the landlord for the shop store. Rent expense, $1,000. So here's what you want to remember is whenever you pay out cash, list it second. There we go. List it second. And expenses are always listed first. So let's see if we have that. I don't need that bold, but there we are. Rent expense. So list expenses first. And when you're spending money, cash is listed second. It's a really easy way to remember it. And if you remember that, that takes care of like, I don't know, 60, 70, 80% of all your transactions. So coming down to transaction number 2, purchased parts supplies on account for $5,000, parts inventory. So Fred is buying parts inventory. So we're going to list that first. It's a nice thing to have. And it'll be $5,000. And it's on account. Fred is not paying cash. So it's accounts payable. So whenever you buy something on account, accounts payable is listed second. And that's a good way to remember. Number 3, paid shop insurance for the next 3 months. Prepaid insurance, $1,500. So Fred is, instead of buying parts inventory, he's buying insurance, prepaid insurance. And he probably paid cash. So whenever you pay cash for something, you list cash second. So here we go. Now, why is it called prepaid insurance? Well, what it is we all have to pay insurance in advance. For instance, when you pay for insurance for your car, you don't get to drive your car around for a month and then pay your insurance. You have to pay for your insurance up front first. Then you get to drive your car. And that's why it's called prepaid, because it's paid in advance. And in fact, Fred paid for 3 months in advance. Maybe you got a special deal for paying in advance like that. Number four here, receive cash from customers who had small engine equipment repaired, repair revenue, $3,000. So Fred is receiving money. Whenever you receive money, you put cash on the left-hand side. There you go. And Fred did his job. Remember, this is so important. You can only claim revenue after doing your job. You have to do your job first, folks. A lot of people get into big trouble for this. Serious trouble, like go to jail trouble. And I've known a couple of accountants that went to jail for this, for prison. I knew one. One of the accountants had his office 2 doors down from mine, and he actually went to prison. So anyways, kind of scary. Number 5, purchased additional land for future shop expansion. So Fred is buying up land around his shop. So we're going to list land first because land is what Fred is buying. Let's see what happened here. Paid $5,000 cash down payment. Now, whenever you pay out cash, list cash second. There we go. So paid $5,000. So I'm going to put that $5,000 right in there. And signed a $30,000 mortgage payable. So that's like accounts payable. Here we go. So the land had a total cost of $35,000. So look at this. This is the first time ever in my accounting videos for principles of accounting that we've had a journal entry like this. We have something on the left and we have 2 things on the right. But you know what? The lefties still equal the righties. Lefty is 35,000, and if you add up these 2 righties, 35,000. So here's how you can remember this. Whenever you pay out cash, list cash second like we did there. And mortgages payable, it's like accounts payable. It's a liability, it goes on the right. 30,000. And we're buying land, which is an asset. And assets go on the left-hand side. 35,000. So it will all make sense. Now, if it doesn't make sense, don't get too worked up about it, because you get better with practice. These journal entries, they all work the same. There's nothing different or new. Paid down the accounts payable balance by 6,000. So Fred is paying off some bills. Now, whenever you pay bills, you're spending money. So whenever you spend money, list cash second. And he's paying for a lot of bills here, $6,000. And what's he paying? He's paying down the accounts payable balance. And you'll see how this all works out. Works out real nice. 6,000. Number 7, Fred found out the parts supplies in transaction 2 were not what he ordered. Fred ordered chainsaw parts but received brake parts from Mercedes-Benz cars. So what happened there? Fred does not repair cars. And so Fred sent all the parts back to the supplier. Big hassle. But the supplier reversed out the $5,000 bill that was due. So let's go back to transaction number 2, see what happened. So in transaction number 2, purchase parts supplies on account for $5,000. So what did we write down? We wrote down parts inventory on the left, accounts payable on the right. So Fred had to undo all this, and he had to get credit for these parts that he sent back. So he doesn't have these parts anymore. So what we're going to do is we're just going to reverse what we did here in number 2. We'll do just the exact opposite, and it'll clean out those accounts. And it's important to do that, because if he doesn't, he might think that he owes money to a supplier and accidentally pay them again. And some suppliers are not very nice about returning money. So here we go. So what we're going to do is we're going to do the opposite of what we did in transaction number 2. There we go. Hey, and I hope you've noticed that whenever we have something on the right, it's indented a little bit here. Things on the left go right up here to the line. And what I'm doing this in Excel, obviously. And I'm just spacing this out 6 spaces, because 6 spaces seems to look good. You could do it 4 spaces or 8 spaces, whatever, but just so it looks nice. Make sure we can tell which is the left and the right. So we're reversing out what we did in transaction number 2. It's the exact opposite, and it's cleaning out that account. And it's important for Fred to do that, because it's easy to pay your bills twice. I've seen that happen, where companies accidentally pay their bills twice, and they don't realize they pay their bills twice. Fred paid a college intern $1,000 to improve his website, and he's going to call that marketing expense. Now, if you remember the rules of thumb, all expenses are listed first. Just list expenses first, and you're good to go. And he's paying out cash. Whenever you pay out cash, list cash second. If you can remember those 2 things, that'll get you like 80% of the way there. Number 9, Fred was checking the mail, opened a letter from his insurance company, was happy to see a refund of $300. Fred overpaid his insurance, and the refund is related to transaction number 3. So let's go back to number 3, see what he did back there in number 3, or see what we did. So here's when Fred bought that insurance. Prepaid insurance, $1,500. He paid cash, so we're listing cash second for $1,500. Fred thought the bill was for $1,500, so he paid $1,500. Turns out he paid a little too much. So kind of a happy day here. Get a refund. Whenever you get a refund like that, that's pretty sweet. So what we're going to do is we're going to reverse out, not everything, but we're going to reverse out part of it. Now, cash is coming into the business, so we're listing cash first. Whenever cash comes in, list it first. There you go. So that reverses it out. So very nice. Number 10, Fred paid $150 cash for special parts that were installed on a snowblower for a customer. So whenever you use up parts or resources, that's considered an expense. So we're going to call that parts expense. It's not parts inventory. Parts inventory are parts that are sitting on the shelf waiting to be used. These are parts that were actually used. And Fred paid cash too. So whenever you pay cash, list it second. There you go. Transaction number 11. We're almost done with these transactions. Transaction number 11. Here we are. Several snowblowers were sold for a total of $15,000. Sales revenue. Fred collected $9,000 in cash, and the remaining $6,000 will be paid by customers 2 months from now. So money's coming in. Money is coming in, and for a small business owner, that is a wonderful thing. Not all of it's coming in, but $9,000 are coming in. And Fred here will collect this money because these are good customers. He can count on them. He will get paid the other $6,000 in a couple of months. So what we're going to do, we're going to call this accounts receivable. Accounts receivable. When people owe you money, it's a receivable. And Fred did his job. He did his work. He sold the machines. He did his part of the bargain. So we're going to call it sales revenue. So look at this. So let's make sure our lefties equal our righties. Well, on the left, we've got 9,000 and 6,000. And if you add those up, you get 15,000 there. That's sales revenue. So a couple ways to remember this. When money comes in, cash is listed first. And sales revenue is always a righty. It's the opposite of an expense. It's a righty. And accounts receivable, that's a nice thing to have. That's an asset. It's nice when people owe you money. It's not so nice when you owe other people money. So there you go. All balances out. And if that transaction threw you a little bit, well, you'll see more like it. It gets easier. Fred paid his assistant Sally $4,000. Now, this is wages expense. Expenses are listed first. So there we go for $4,000. And Sally likes being paid in cash. So whenever you're spending cash, you list cash second. There we are. Transaction number 13. Fred withdrew $2,000 out of the business checking account, went to Central City, a Colorado gambling town, and lost all his money. Well, it doesn't matter if he lost or won, but the point is that he withdrew $2,000 out of his business checking account for personal purposes. Now, Fred is spending money out of his business account, so we're going to list cash second. And it's $2,000, and it's not going to be an expense because expenses are costs of doing his job. And his job is to fix snowblowers, not to go to Central City and lose money. And Central City is in Colorado, and it used to be a cute little tiny town with little teeny casinos that were really small, and it was really a fun place to go. But I haven't been there in, 2 decades. But it's different now. It's kind of like a little teeny weeny mini Reno or Las Vegas, and it's not quite the same atmosphere that it used to be. So dividends. So we're going to call this dividends, folks. Dividends is whenever the owner of the business withdraws money out of the business, and specifically corporations. So $2,000. And here we go. So number 14, Fred rented out the adjacent land he purchased to a bar. The bar plans to use the land for overflow parking. The bar paid Fred $4,000 in advance for the rent. So we're going to call this unearned rent. Unearned rent. So Fred got paid money, so we list cash first. And we're going to put on the right-hand side unearned rent. There we go, unearned rent. So what the heck is unearned rent? Well, unearned rent it's a liability, actually. These people from the bar, they paid Fred $4,000 in advance. So Fred owes them something. Fred has promised to let them use land. And so for a few months here, it sounds like. And so Fred's got to let him use that land. So until that land is used for overflow parking, Fred owes him something. He either owes him the space on the land, or he's got to pay the money back. It's sort of like whenever you make a deposit or something. It's your money, but other people are holding on to it, and so those other people owe you the money. So coming down here, so we are done with the transactions, ladies and gentlemen. We are done with the transactions. Here's my general journal that we just finished. And I'm going to go down here to the general ledger. So what our job is we're now going to take these numbers off the general journal and put them over here into the general ledger. And you might be thinking, well, wouldn't it be a heck of a lot easier if we would just list things in the general ledger in the first place? Skip this general journal thing. Well, that'd be a really bad idea. You'd be like one of my students trying to invent a new way to do accounting. The reason why we do this general journal is the general journal is a chronological listing of what is going on in the business. So if you have a question like, gee, didn't I pay that bill on the 14th? Well, you could look in the general journal and find out. Or, gee, did Joe Smith pay me what he owed me? You could look in your general journal if you're keeping good business records. And so there's a lot of good information that you can get from the general journal. Now, the general ledger, if somebody said, hey, how much cash do you have? Well, you could look there and 14,000. Hey, how much do you owe in accounts payable? There you go, 18,000. How much do you have in common stock? Boom, there you go, 8,000. So the general ledger can answer different kinds of questions. And also the general ledger is the heart and soul of the accounting system. And that probably doesn't make a lot of sense right now, but it will hopefully in the future. So here's all we're going to do, folks, is we're going to just take these numbers from the general journal and put them right down here in the general ledger. I can see that my camera is going to run out of time here. It only films for 30 minutes at a time. And so I'm going to turn the camera off and then turn it right back on. So here we go. Got that camera working again. So here's what we're doing. We're going to take rent expense for 1,000, and we are going to put it right down here under rent expense for 1,000. Here we go. So there it is. Now you might say, hey, you already got $5,000 already there. Where'd that come from? That came from the beginning trial balance. The beginning balances, the end of October, that was one of the first things we did. So that's where it came from. So this is a running total of the expenses here. Now we've got cash for $1,000. Cash for $1,000. So we're going to put that under cash, and it's on the right-hand side. There we go. It's on the right-hand side. So I'm going to put it on the right-hand side. And it really doesn't matter if you put it up on top here or down a space or two. It doesn't matter. I just decided to put it right here. Now, a really important thing is make sure you mark off. Put a check mark or something that you actually did post those. I'm going to just put it in dark green, okay? Dark green. And whenever I have dark green, that way I know that I have posted those numbers. All right, so that's done. If you don't do that, if you have any distraction whatsoever, the phone rings, somebody texts you, somebody asks you a question, or you start daydreaming or whatever, you won't be able to remember where you left off, and you'll mess up. So, okay, parts inventory for $5,000. Parts inventory on the left-hand side. Let's get that posted. Parts inventory, $5,000 on the left-hand side. There you go. Accounts payable on the right-hand side for $5,000. There we are. Okay, so we got this one done. I'm going to mark it off so that way I don't get mixed up and say, oh, did I do that or didn't I? Because that's the biggest way to mess up. Okay, prepaid insurance. Prepaid insurance is a nice thing to have. It's nice to have insurance. Prepaid insurance. Hopefully it's something you don't need to use, though. It's nice to have, though, when you do need it. Okay, here we go. Prepaid insurance on the left-hand side, $1,500. Cash on the right-hand side for $1,500. Coming down to transaction number 4. Whoa, I forgot to mark that off, or I might think, oh, did I do that or not? There we go. Dark green means I posted it. You can just use a check mark. Cash on the left-hand side for $3,000. So I'm going to put $3,000 here. There we go. Repair revenue, $3,000. So let's find repair revenue. There you are. 3,000. That 30,000 in repair revenue, that was the beginning balance, and we'll just combine them and we'll be on our way. So let me highlight these, and that way it tells me I did it. Oh, here we go. Land is being purchased. That was kind of a new entry for us here. Land being purchased for 35,000. Fred is owning quite a bit of land around there. 35,000. Cash is on the right-hand side because he was spending cash. So on the right-hand side, here we go. Mortgage payable, 30,000. Now this is a brand new account, so if you have to create a new account, that's okay. Nothing wrong with that. Mortgage payable, 30,000. There you go. Number 6, accounts payable on the left-hand side. Now, folks, it really doesn't matter where on the left-hand side. Just so it's on the left-hand side, that's the important thing. I'm not being very consistent. Over here, I put the 1,000 right next to that one, but it doesn't matter. Just make sure if it's on the left-hand side, it goes on the left-hand side. That's what's important. Cash on the right-hand side for 6,000. That goes for anything on the right-hand side too. Just make sure it gets on the right-hand side. So we got this done. Transaction 7, accounts payable on the left-hand side for 5,000. Now, you know what? When we post things to the general ledger, I'm not writing down again what happened. That doesn't matter. If we want to know what happened, we could go back to these transactions. Parts inventory is being decreased by $5,000. It's on the right-hand side. This $5,000 on the right-hand side, it really doesn't matter where it goes on the right-hand side, just so it's on the right-hand side. Transaction, got to mark that off. There we go. Transaction number 8, marketing expense, $1,000. So that's good. There we go. It's always on the left-hand side. Cash on the right-hand side for 1,000. Cash on the left-hand side for 300. Oh, and I forgot to mark that off. I'll tell you what. Make sure you mark it off, or you can lose your place and wonder, gosh, where am I? What did I do? So cash on the left-hand side. There we go. Now, again, folks, it doesn't matter where on the left-hand side you put it. I could have put it right there. I could have put it here. Doesn't matter. Just so it's on the left-hand side. We're going to just add it all up when we're done. Prepaid insurance, $300 on the right-hand side. And mark this off as being done. Parts expense, $150. So parts expenses are over here on this side. So parts expense for $150, and cash is being spent for $150. Cash is on the right-hand side. And coming down here to transaction number 11. 11 was another new one where we've got 3 things going on. Well, cash is coming in. Cash is on the left-hand side. There we go. Accounts receivable on the left-hand side for 6,000. There you go. And sales revenue on the right-hand side. Sales revenue. After you've had a lot of practice, you'll understand that revenues are always on the right-hand side. Wages expense. Here we go. $4,000. There it is. Oh, and I forgot to mark off that transaction. I got that all done. There we go. Transaction 12, there's the wages expense, $4,000. And cash is being spent for $4,000. Cash is on the right, so I'll put cash on the right. Doesn't matter where on the right, just so it's on the right. Number 13, dividends, $2,000. Now, dividends are, as you know, dividends, that's when the owner withdraws money out of the business. But it's not for doing his job. It's not for repairing snowblowers. It's for personal reasons. So dividends and expenses, they behave the same way, even though they're not the same thing. They behave the same way. So there we go. Got dividends done. Cash is on the right-hand side. Cash is being spent. And there we go. Last transaction. Let me mark that off. Cash. Let's see here. Cash is coming in, $4,000. There we go. And this is unearned rent. This is when people pay you in advance and you owe them something. You owe them something. So there we go. Let's mark it off. So I'm going to get rid of this split, and I'm going to just take a look at my general journal and make sure, oh, look at that. I did not mark off wages expense. I'm going to double check here. Let's see if I marked off everything else. Everything else got marked off. So I'm going to just double check. So wages expense and cash for $4,000. Coming down here, wages, there it is. Okay, wages expense $4,000. And let's make sure we have it in cash for $4,000. And there it is right there. All right, guys. So it's good to double check. You know, when you do accounting, just double check. Learn to double check every step of the way. Every step. Don't go too fast. In fact, it's kind of weird. If you go slow, you'll actually cover more ground. I know that sounds kind of weird, but if you go slow, you'll actually go faster. So here we are down to the general ledger. Let's find out the balances. So let's find out the balance in the cash account. All we're going to do is add up everything on the left-hand side, including the beginning balance. Add up everything and subtract what was spent. So add up the left, subtract the right. And I've already done that, or I had Excel do it. And I hope you're using Excel, because Excel will save you from a lot of stupid mistakes. So there you go. And it's faster too. You get used to it, it's faster. Use Excel. So add up the left, subtract away the right, and that's what you end up with. Now, the numbers on the left are bigger than the numbers on the right, and you could add it all up and prove that. And that's why we put the balance on the left-hand side. Accounts receivable. Let's add up this. Well, there's nothing on the right, so that makes it easy. 11,000. Let's add up parts inventory. Now, parts inventory, what we're going to do, just like cash, we're going to add up the left, subtract away the right. There you go. $10,000. Add up the left, subtract away the right. There you are. Merchandise inventory did not change. Prepaid insurance, same thing as cash. Add up the left, subtract away the right. There you are. So I hope you're getting the hang of this. Land. Well, there's nothing on the right, so all we got to do is add up those numbers. There we are. Use Excel, folks. Save you a lot of time and headache. Accounts payable. Now, everything on the right-hand side here, like liabilities and equity, everything on the right-hand side, it works just like the left side, but the mirror image. So what we're going to do is we're going to add up the right, subtract away the left, see what we have. There we go. Add up the right, subtract away the left, you end up with $12,000. Let's take care of this unearned rent down here. There's nothing on the left, so let's just total it up. There we go, $7,000. Mortgages payables already totaled up. There you are. And common stock is totaled up. Retained earnings is totaled up. Retained earnings, those are the profits that are being retained in the business. Sales revenue, let's add up those numbers. 60,000. Repair revenue, let's add up those numbers. There you go. Dividends, add up the dividends. Rent expense, let's add that up. Marketing expense, add that up. Adding up the expenses are easy. There you go. Parts expense. The very first trial balance when we first started this problem was listed as of October 31st. Now this is the end of November. So all we're going to do is we're just going to take these account balances and we're going to put it kind of in a more formal looking document here, a very important document. And we're just going to show that it absolutely does balance. So here's all you do. We need to get the balance in cash here. So you just list all your accounts. So on the top side, I've got the general ledger. On the bottom side, I've got our trial balance, which is our last step in this problem. So let's see what the balance is in cash. The balance is $96.50. $96.50. So all you do is write down 9650. Now it's on the left, so put it on the left. Come down here, accounts payable, 11,000 on the left, 11,000 on the left. The word debit means left. Parts inventory, 10,000 on the left, put it on the left. No thinking required here. Merchandise inventory, 20,000 on the left, 20,000 on the left. If it's on the left, put it down on the left. That's all you got to do. And what was this account here? This was prepaid insurance, 2,200 on the left. Equipment, 3,500 on the left. There you go. And finally, land, 60,000 on the left. There it is. Now we're coming down to accounts payable. Maybe by now you already know that accounts payable goes on the right. So let's go up and find accounts payable on our general ledger. On our general ledger, there you are, accounts payable, 12,000 on the right. Unearned rent, what are you here? Unearned rent, 7,000 on the right. Mortgage payable, 30,000 on the right. See, it's easy. You're just copying numbers. That's all you're doing. Common stock, common stock. I know when you're beginning accounting here, it's really tedious and time consuming. But when you actually start doing accounting, it's actually a lot easier because computers do most of this tedious work for us. So retained earnings on the right-hand side for 25,000. So 25,000, there you go. Come down to the sales revenue. Sales revenue, 60,000. There you go. Repair revenue, 33,000 on the right-hand side. Now dividends. Dividends are on the left. Make sure it goes on the left, folks. On the left. Repair expense, 6,000 on the left. Marketing expense. Marketing expense, 13,000 on the left. That's all there is to it. Wages expense, 24,000 on the left. And by the way, these numbers that we're writing down, they represent the whole year to date, not just November by itself here. Parts expense, 9650. There we go. We've got all the accounts written down. Last step, and I'm going to get rid of the split here. So here we go. Here's our trial balance that we just finished filling in. Here's our last step. All we're going to do is add up the left-hand side and then add up the right-hand side and just make sure they balance. That's all we're going to do. And if you're doing it on Excel, you can have it done in a heartbeat. So we have 175,000 on the left, 175,000 on the right. There we go. It all adds up. There we are. And by the way, if you're wondering, wow, do you add stuff up on Excel by clicking that little button there? And the answer is no. The thing is I've done this problem before in advance, so I knew it would work out. And I'm just changing the print to a dark color so it shows up. That's all I'm doing. So, but learning how to use Excel, it's a good investment, folks, especially if you're in business. So we're done. It all balances out. We're good. So I hope this lesson helped you out. I hope it helped you out on your homework. And if it did, hit that like button, put down a comment, let me know where you need more help, and hit the subscribe button too. And that way I'll know that these videos are helping you out and I'll make more.